If you announce great numbers, they raise interest rates to try and kill it. So you can never really have the kind of rally you should have. So either it's incompetent or it's crooked.
I have deep respect for the rule of law. No one, certainly not the chair of the Federal Reserve, is above the law. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure.
He's either incompetent or he's crooked. Those are the words President Trump just used to describe Fed Chair Jerome Powell. And it didn't stop there. He called him a jerk and promised that he'd be gone soon. But this isn't just another heated social media post. On January 11th, the DOJ officially served Powell with grand jury subpoenas. The official reason? Building renovations. The real reason? Powell says it's an attempt to hijack your interest rates. Now, if the referee of our economy is being benched by the DOJ, your 401k, your house value, and the cost of your groceries are all in the crossfire. I'm Chalekian, and today we're diving into the massive repercussions of the war on the Fed and why this could trigger 1970s-style inflation. Okay, let's look at the facts. The DOJ is investigating the Fed's $2.5 billion headquarters renovation. They're claiming Powell misled Congress about the costs, specifically things like VIP dining rooms and fancy elevators. A bit of irony there, but let's move on. Now look, no one is above the law. If there's fraud, it should be investigated. But here's the kicker. Powell released this video on January 11th, something he's never done before, stating that this investigation is a direct result of the Fed refusing to lower interest rates just because the White House said so. Think about that. If the Fed becomes a political tool, they aren't looking at data anymore. They're looking at election cycles. And historically, that is a recipe for disaster. So let's talk about the immediate fallout. Markets hate drama, and they rely on the Fed's data-dependent forward guidance. Political interference makes it impossible for businesses to forecast future costs, leading to a wait-and-see approach that can stifle hiring and investment. We are now staring down what analysts call the sell America trade. Think about it. Why would a global investor keep their money in US Treasury bonds or the dollar if they think the Fed is no longer independent? If the world thinks the referee of the US economy is being bullied, they pull their money out. We're seeing what investors call a risk premium being baked into our markets right now. They will demand this in order to hold US debt. We're already experiencing a weaker dollar, gold hitting record highs, more expensive imports, and a stock market that's on edge. When the president calls a Fed chair crooked, he's telling the world the US financial system is compromised. That is a dangerous signal to send to the world. Now let's look long term. Trump wants lower rates. He says beautiful big rate cuts should be happening now. But there's a reason we don't let politicians set interest rates. Look at this data. It's a simple rule. Independent Fed equals low inflation, political Fed equals sky-high inflation. When you pressure a Fed chair to keep rates low just to juice the economy, you're basically printing money to win the election. The result? Entrenched inflation. We're talking 1970s vibes where your paycheck buys less every single week. And here's the irony. This pressure could actually make your mortgage more expensive. If bond investors think inflation is coming back because of this political theater, they'll drive up yields, which can paradoxically drive up interest rates for mortgages, car loans, and business credit, the exact opposite of the lower rates Trump has demanded. There are also long-term repercussions of currency devaluation. The US dollar's status as the world's reserve currency is built on the belief that the Fed will protect the currency's value regardless of politics. Undermining this trust could accelerate global efforts to diversify away from the dollar. Lastly, you can expect capital leaving the US. If global investors believe that the Fed is no longer impartial, they may shift capital to more stable environments like the Eurozone or emerging markets with stronger institutional protections. Finally, we have to talk about the precedent this sets. Using the DOJ to go after a Fed chair over office renovations, which Powell called pretexts, is a nuclear option. This effectively treats the Fed as a subordinate executive agency rather than an independent body created by Congress. You're also seeing institutional fallout like never before. Senator Thom Tillis is already blocking all Fed nominees until this is resolved. The Fed board could end up paralyzed. Lastly, you can expect a leadership vacuum. Powell's term ends in May, and Trump is already calling him a jerk who will be gone soon. But who's going to take that job next? If the next chair knows they'll get a subpoena the moment they don't cut rates, they aren't a chair, they're a puppet. That destroys the credibility of the US dollar as the world's reserve currency. Look, you might be frustrated with interest rates. I get it, but breaking the Fed to get a temporary rate cut is like burning down your house to stay warm for one night. The bottom line is that this isn't just about a building, it's about who controls the value of the dollar in your pocket. If you're worried about how this volatility affects your portfolio, you need to have a plan that doesn't rely on the whims of DC. As a financial advisor, my job is to help you build a future that lasts and make sure your portfolio isn't just hoping for a rate cut, but is actually hedged against the inflation that this political pressure could cause. So what do you think? Is Jerome Powell crooked, or is the DOJ being weaponized to the detriment of our economy? I want to hear your thoughts, so drop a comment below. I'll be jumping in to reply to as many of you as I can. And if you found this helpful, do me a favor, hit that like button and subscribe. It helps me get this education out to more people who are trying to navigate these crazy markets. Thanks for watching, and I'll see you in the next video.